You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution in trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean only one thing. It is Friday. It is noon Central. It is 1 p.m. Eastern. Time to conclude our broadcast week by looking back at the week that was and still is, from a vol trading and trending and unusual activity and all sorts of fun perspectives. Yes, it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, in the aforementioned network, reminding you wherever you get this content, keep rating and reviewing. It really does help all the new folks continue to discover the program. It's been so great to see the folks who come into some of our basic content, like let's say boot camp or OPR, and then they graduate to shows like this or the Option Block or TWIFO, and hearing their stories of their evolution is just fantastic to hear. So keep rating and reviewing. It really does help those new folks find their ways to the content. Of course, keep those questions coming too. We do love to hear from all of you out there. You folks have some sometimes left field questions. We love them all. Keep them coming. We do love to hear from you guys out there. And let's see who we're hearing from on the old program today. First, let's go out to the Matrix hot seat, where I do believe he has recovered from his binge day drinking yesterday. Yes, he is the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of Carmen Line Capital, by way of a ROBINHOOD thing or two here or there, by way of Volman. You get it. Mr. Rock Lobster, welcome back to the program. Sir, have you finally slept it off, sir? You feeling better?
I think I did. I think I shook it off a little bit. It was a rough day yesterday, I have to say. It was a rough day, but you have those days. You got to bounce back and get ready for the next day.
Our audio editors were not fans of you yesterday. Let me just put it that way.
Throwing darts at my picture on a dartboard.
What is wrong with this guy? Yes, we could fill a whole show with that whole question. What is wrong with that guy? Instead, let's move on out to the MIAX hot seat, where we are joined once again by the Oracle of New Hampshire, a.k.a. the keeper of all the cool earnings vol data that you folks love, particularly this time of year. He is Mr. Matt Amberson, the founder over there at ORATS, a.k.a. Options Research and Technology Services. Mr. Matt, welcome back to Volatility Views, sir.
Great to be here. Great to be here with Andrew. Andrew and I have had similar paths. I think, did we both start in California, went to Chicago, and the Seaboat stood right next to each other on the floor as market makers. And then we're in the beautiful northeast.
Yeah, you guys have both fled to the northeast, to your own private compounds now. You two have had really... It's like Hitler and Stalin, parallel lives, right there. There we go.
and Matt we're giddy. It's a beautiful day out here. You know, it's like you've been in jail for 4 months, and now it's just it's starting to let up. So it's gorgeous out here.
Not quite there yet. I think we had like hail and sleet this week in Chicago, so we're not quite there yet. But we are there to review the vol. So let's get to it. A little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let's do it. Welcome to the Vol Review, the portion of the show where we do just that. We break down what's going on out there, what's lighting up our screens today from a vol perspective. And coming into the start of the show, we're seeing a bit of a reverse of yesterday's action in the broad market. Yesterday, we started off a little bit green, and then Biden seemed to spook everybody with that capital gains talk, and all the markets took a pretty big hit. Coming into today, it seems like they're shrugging those concerns off again. Most of the major indices up pretty firmly today. S&P up nearly 1.2%. The NASDAQ up 1.5%, and the Dow, the laggard, only up a paltry 0.2%. That means all of our vol friends taking a bit of a break, even though net, given yesterday's sell-off, we're still up a bit from our show last week, particularly in Spikes land. Remember, Spikes was in a 15 handle this time last week. So Spikes was really feeling the squeeze last week. So, of course, it's going to be up from that level. Coming into Showtime, we had Spikes around a 1730 or so, puts it up almost 2 points. 1.8 points from where it was this time last week. Fixed cash coming at Showtime was at a similar level, about a 17.35 or so. That puts it up a little over a point, about 1.15 points from where it was this time last week. So a little bit more juice. Will it still be there by the end of the show? We shall see as we head into the crystal ball a little bit later. VVIX back up north of the 100 level, up to about 110 or so. Briefly flirted with the 120 level yesterday as things were rocking and rolling and the markets were selling off pretty hard out there. Now back to 110. We'll see if it can dip back below the 100 level or if it's going to bounce around here for a little bit. All right, let's get on out there, start crunching them numbers. Let's start in the MIAX hot seat today. Mr. Matt hasn't been on in a little bit. Mr. Matt, a lot lighting it up from an overall vol perspective. We'll get to all the fun earnings stuff in a little bit, but before we get there, what's lighting up your tape out there from an overall broad market volatility perspective these days, sir?
Yeah, well, this rally has kind of taken a lot of the juice out. It wouldn't be a full show if I didn't mention my favorite 5 delta puts. Robinhood has changed the option market, much like 1987 changed the left tail. Robinhood has changed the right tail, and we still have that SKEW hanging in there. It's come down a little bit, but it's still there. So, of course, watching that. I have to get to this early, Mark. We have this new toy, and I have to talk about it. It says what we look at is the components of stocks of the ETFs compared to the ETF's volatilities, and to see, if there's an overlay or underlay type of a situation. So what we'll do is we'll take the weighted average of all the all the percentiles when we just look at a month, because we found that that's a pretty good indicator for our volatility strategies in a separate tool that we have. But when we have a lot of the components at a much higher percentile, we think that that's undervaluing the ETF, and that's happening in the XLF and IBB, the biotechs right now, where we think the components are higher than the ETF. But the opposite side of that is SPY. SPY is, the volatility is down today, but it jumped up yesterday. Biden announcing the income or the capital gains tax, and the vol spiked up and it went ahead of much of its components. So those are the types of things that we look at. So we'd see SPY to maybe come down as it's coming down quicker, and then the IBB, the biotechs and the financials might stay strong. So that's what we're looking at, Mark.
A lot to be done, a lot to be analyzed there with the components of vol versus the index itself. We'll get to some of those components in a little bit. First, let's go back out to the GIOVINAZZI fortress-like compound. Glad to see everything seems to be working now. The tree that crushed it all has been removed. Mr. Rock Lobster, a lot going on yesterday and today and earlier this week from a vol perspective. What's been lighting up your tape and indeed the tapes of Vol Man this week, sir?
Well, I'm looking at my P&L for today, and I'm seeing a little bit of a vol crush from yesterday in the May cycle. Little weekend effect, little of everything, but definitely some bloom is coming off the vol rose. So always, it's always interesting to see how the market reacts to this the news that we had. And I could say we are definitely just seeing for the price of some of the options, just lower bids, lower calls. A couple of trades that I have on. This is the low point of the strangle. That's usually for some of the trading I do. I kind of lean short and then buy a couple of calls and stuff when we have this curve shape. And like right now, the strangle values are just like a hair underwater. They were actually bid. Even though they were short delta, they were bid, and I could have closed them, but they're up a little bit, not much, not worth closing. And right now, I would say they're starting to take some vol out of vol. Now, generally, I would say it's pretty bearish VIX. It is a Friday, and we'll see what's going on. I'm sure maybe Matt has some things from his eye in the sky point of view, but it feels, it feels, and I'm looking at it like they're taking some vol. They're taking some vol out overall. Now, it's very interesting also on looking at other products like peripheral products. Like I like SQQQ because it's kind of a fun thing to play with because it has that pop potential. Vol's coming out of that. So vol, I would say, products that are sensitive, and I don't mean those 5 delta calls, Matt, we're talking about. But I think products that are more vol sensitive around the money, seeing a little contraction today. So overall, the market is totally shrugging off the Biden thing from what I can tell. So that is my observation, sir, and I am sticking with it.
Gotta love how the thing that was the boogeyman yesterday is now, we've moved on to the next thing. Let's see what the vol products are moving on to right now. Let's start out there in futures land. We've been talking pretty much the entirety of this year about this crazy plateau that's been hanging out there in the VIX futures. Still there, a little bit different out there these days. Obviously lower than it was a few months back when it was plateauing around it's 28, close to 30. Now it's plateauing in the latter months around 25, pretty close to it out there. So a few points lower in that front portion of that curve, obviously much lower, but we still have that same general shape out there. Maybe the front portion of that curve getting a little bit more interesting out there. Mr. Rock Lobster, anything catching your eye out there from an overall VIX futures curve perspective, sir?
I'm looking at this. It has, I would say, it has kind of normalized. It's still settling. I would say it's a little bit expensive. from our theoretical value of kind of where VIX is at any particular point in time. However, it is normalizing. There's still some juice there. So again, this remnant of the COVID era, this back end just really, there has not been the crazy aggressive seller of puts in SPX yet. They're just not here yet. I'd like to hear Matt's thoughts on that, but at least from the drop of basically the low end, front end of VIX or SPX, the ball has really come in on that. It throws the forward vol of the back up more, and we had this kind of steeper curve. So it's like, okay, nothing's really happening now, but there's no real sellers in the back. So I think that is still in place. It's not as much as it has been in the past. We've talked about this like January last year. So it's there. It's not as much. So, I mean, as much as I could tell, the big difference between this week and last week is VIX closed 1625 last Friday, and it's 1720 today. So still got a little more vol, not as low as it was, but it's all the signs point to it kind of going into Palookaville again.
Yes, it's there, but not so much. That kind of describes what's going on from a volatility options perspective these days as well. We'll start in Spikes land. Remember, listeners, there was that size 4-way in April that was kind of dominating the open interest. In Spikes, that has clearly gone off the board now with April going away. That was the 18-22 put spread versus the 30-40 call spread, up 1,000 times for each of those. That's now off the board. So pretty much what we have left are the June 25-50. I guess you can call it a risk reversal, even though that put is kind of meaty right now as well. And that's kind of dominating the Spikes options landscape right now. Heading on out to VIX, it's kind of a similar story. It's pathetic out there, quite frankly, today from a volume perspective. 130,000 contracts on the tape right now. That's a pretty light day for VIX. The ADV is pretty much close to where it was this time last year, up about 10,000 contracts. That's a lot of that reflected from a little bit of a surge we saw earlier in the week that seemed to save things, because the rest of this week overall was pretty light out there from a VIX options perspective. Before we get into the rest of the days, let's break down the top 10 sizable positions. Once again, we're back to puts dominating calls in the top 10. Obviously, with April going away, it took a lot of the calls with it that were out there. So now we only have 3 call positions left in the top 10. So 70-30 puts over calls in our top 10 out here. Only cost you 103,000 contracts to break into the top 10 right now as well. That gets you to the May 20 puts. Number 9, 110,000 of the May 23 puts. Number 8, $1.15 of the May 17 puts. Number 7, 116,000 of the June 15 puts, the first and only June in our top 10. Number 6, 116,000 as well of the May 18 puts. Number 5, $1.20 of the May 21 puts. And we're all the way up to number 4. We haven't even broken 200,000 yet, listeners. Number 4, a first of 3 calls on the list, 127,000 of the May 60s. Number 3, $1.52 of the May 16 puts. Then we go to the top 2. You probably can guess what this is. This is that size July vertical we talked about a couple of weeks ago on the show. It's still open, and it's still the dominant position in VIX right now. 243,000 of the July 40s and 252,000 for number 1 of the July 25. So is that July 25-40 vertical that went up for an impressive amount of size not too long ago. Still dominating the tape. Nothing else comes close, and no other position in VIX right now even eclipses 200,000 contracts. So that kind of shows you how light things are out there right now. A little bit north of 7 million contracts open total, about 4.3 million on the calls and about 2.8 million on the puts. Getting out there to today, it's kind of hard to even really parse a top 5 most actives when you pretty much you only have 130,000 contracts on the tape. But if we must do so, then I guess we will. 13,000 is number 1 today of the June 40 call. So a little bit of June popping off today. 13,000 as well of the June 75. So looks like maybe a funky, pretty wide June vertical going up today. 12,600 for number 3 of the June 24s. Number 4, 7,500 of the SEP 45 calls. And rounding out a pretty paltry top 5 here, we've got the April expiring on the 28th. So next week, 45 calls, 65, 80 of those. So all calls today in the top 5. So what little there is out there today, all calls, a little bit, and I emphasize a little bit more paper on the tape yesterday, 264,000. These are some of the lightest days we've seen in VIX in quite some time. Again, parsing the most active of that is kind of a fool's errand, but we shall endeavor to do so nonetheless. Number one yesterday, or most actives, June 45. It's actually a decent print, about 37,000 of those, followed by 25,000 of the May 17 puts. Then number 3, we drop off quite a bit, 12,000 of the May 15 puts. Number 4, 11,600 of the May 18 puts, and rounding out, again, a pretty anemic top 5, 10,300 of the May 60 calls. Heading on out to Wednesday, a little bit more paper, 410,000 contracts on the tape. The most active contract on Wednesday, 38,000 of the June 45s, followed by 34,000 for number 2 of the June 40s. So it looks like a little bit more June vertical fun out there. Number 3, May 17 puts, 25K. Number 4, June 30 calls, 22, almost 23,000. And rounding out the top 5, June 15 puts, 16,000. A lot of June hitting the tape this week. Tuesday was the most active day, 813,000. That's the one day that really kind of saved the ADV out there this week. Number 1 most active contract on Tuesday, just a tick under 50,000, 49,800 of the June 17 puts. Number 2, 44,000 of the June 50 calls, so maybe a bit of a June risk reversal there as well. Number 3, 42,000 of the April 18 puts, and number 4, 40,000 of the April 20 calls. So interesting. Maybe adjusting there, maybe rolling and adjusting definitely on the call leg, way up from the 20s to the 50s if they are related. And number 5, we got the April 19 puts, 28, almost 29,000. So that was the most active contracts on the most active day of the week. Monday, also respectable, 591,000 contracts on the tape. The most active contract, 35,000 of the May 20 puts, followed by 32,000 for number 2 of the April 17 puts. Number 3, 27,000 of the May 35 calls, as the Irish like to say. Number 4, 22,000 of the April 20s. And round out the top 5 on Monday, 20K of the April 21 calls. Mr. Rock Lobster, kind of a weird, kind of an anemic week. Outside of Monday and Tuesday, really not a heck of a lot going up. And certainly you can almost shut it down today. There's nothing going up today. Anything of this anemic volume catch your eye out there this week, sir?
Mr. Sebastian has had taken an interest in some of the June and May, like some of the May junk puts, like 15s, June 16s. From a volume point of view, it's like, VIX really doesn't trade when you have a 3-handle move all week. So I think we barely had that. So, it likes action. And we just didn't see it. So as far as a volume point of view, I didn't see, none of this really caught my eye paper-wise. But what I have noticed is there was kind of a slackening of that crazy put buying. There was a lot more action buying puts in VIX, and it's kind of calmed down just a little bit. So for whatever that's worth, I see 1625 as the recent low. I would be surprised if we got down a whole lot lower than that in the next couple of weeks, given the way the market is. But definitely some action like the May, even if we had that kind of rally to like almost 19-ish yesterday, there's the 17 puts, which are at the money for May. I'll not be a future, but cash, 1,800 contracts. I mean, the May 18 puts are 95 cents. Like those things are, they're very, very inexpensive relative. And they're not generating a ton of interest. So I think, to be honest, is the way it looks like people are sitting and waiting. So that's what they're doing. But they're not coming in and gobbling it down. That's for sure.
People are sitting there waiting, kind of a theme for the vol market maybe this week out here. You know what we were waiting for as well, listeners? For so long we were waiting for this day. It is finally here. If you pull up VXX on your platform of choice, if you can find it, that is. I was having some problems this morning with a variety of platforms. They're choking on VX. I couldn't even get options chains on several of them this morning because it's back, listeners. It's back up to the 40 level that everyone loves out there. Yes, the reverse split went into effect last night here. We're back up, pretty much coming into showtime. Was at about exactly a 40, maybe a little bit shy of that now as it's starting to give up the ghost yet again. So if you have some residual options out there, enjoy your funky stub quotes. Enjoy this period here where they have the new symbol. I do believe it's VXX1 now. That's always a fun time for everyone. The chains screw up. You get errors. You get bad quotes. I had a platform I was trying to work an order the other day. They were trying to put that same order again in at the new without the new symbol, and the whole thing was going crazy. So enjoy this period, listeners, where you're going to have probably a lot of issues on the brokerage front. But the day you've waited for has happened. VXX is back at the 40 level. Of course, those issues are being reflected in the absolutely non-existent volume that is going up out there in VXX today. Go figure, if no one can trade your product because it's broken on just about every platform out there, no one's going to trade your product. There was 37,000 contracts on the tape a little while ago. It's up to about 49,000 now, but still the ADV is nearly 300,000. That's down 16,000 from our last show. That ADV has just been annihilated over the last couple of weeks that people have been waiting for this reverse split. This little brokerage kerfuffle will get sorted out hopefully soon, and the volume will pick back up. But it needed this little shot in the arm to really get things going again out here. Let's see what's going out there from an overall top positions out here. Top 10 in VXX land right now. Number 10 cost you 23, almost 24,000 to break into the top 10 in VXX, or should I say VXX1? I won't say that. I hate that. 23,800 of the SEP 9 puts. Number 9, 24,800 of the April 10 puts. These go out today, so those will be gone next week. Number 8, 25,000 of the June 20 calls. It's all over the place here. Number 7, 29,000 of the June 9 puts. Number 6, 33,000 of the SEP 10 calls. Number 5, 34,000 of the June 10 puts. Number 4, 34,000 of the May 11 calls. Number 3, 39K of the May 9 puts. Numero dos here, 49,000 of the May 10 puts. And rounding out the top 10 here, number 1 with 52,000 contracts, the May 12 calls. Again, all these strikes soon to be adjusted and joyous out here. But we are back at the level you've all wanted, all the thing you've all been writing in about for weeks. When's the split going to happen? It has finally happened. Mr. Rock Lobster, was there a little party in the option pit today as VXX has finally gotten back to a level that everyone can sink their teeth into?
There is a slight party. I actually finally did close my options yesterday. It was kind of a bit of a Pyrrhic victory for me on the trade, unfortunately. But it is good that it's getting down to this to a more tradable level. I know it's probably statistically everything should move proportionally, but it never quite feels like that. So I like it a little better when it's more expensive, so that's what we have. So yes, there will be a party Monday when all of the systems catch up with the ability to list.
Yeah, have you been seeing that same problem? Like, good luck getting an option quote on VXX right now.
Yeah, that's what I said. Like yesterday, I did finally get to close it, not the prices I should have, because the listeners, I did not put a stop in before my power went out, and I actually would have been fine. The stop would have executed, but I did not get very good prices, mostly because I was just being a lazy doofus. Normally I close them out and then I wait till like all the systems get ready again and then just sort of kind of get back in the game. But yeah, what makes it fun now is you're going to start seeing like the Jan 2022 puts, like all that kind of stuff, those kind of interesting trades where, hey, VXX has kind of a bad summer. All these junk puts all of a sudden look really great again. Lots of fun to be had. So I will be excited on Monday. I am holding all excitement until Monday when I actually see some quotes and everybody can deal with all this stuff.
Yeah, it is frustrating because it is moving a little bit today. But, going into this past is prologue. This has happened pretty much every time, and it's happening yet again. So if your platform is wreaking havoc with your VXX listeners, that's why the symbology is not your friend out there today. No one else is not your friend out there is UVXY. It's actually up 1/10 of a point from last show, but it's still hovering around that 4.6 level. Nothing going on out there. A little bit more paper, though, than VXX. That's telling you something. VXX, 49,000. UVXY, 130,000. So that one actually still trading, probably because you can. You can't really trade VXX right now. I'm not even going to bother breaking down the top 10. Everyone's still waiting. When's the reverse split? We don't know. Has not been announced as far as I have seen since our last show, but we'll keep an eye on it. Meanwhile, all these legacy stub 7 calls and 5 calls will continue to be the dominant positions out here. But you know what else is dominating our tape right now? The reason why we had to have Matt back on the show here, because what kicked off again recently, it's back, baby. Yes, it's earnings season. Matt is the keeper of all that fun earnings data, all the good stuff you folks love to see over there at theoptionsinsider.com. Comes courtesy of Matt over and his team. A pretty hot week this week as well. We had Coca-Cola, a.k.a. one of Buffett's favorites, on Monday, IBM, United Airlines. Tuesday, J&J, a big one out there these days, as well as P&G. It was ampersand soup on Tuesday. Abbott Labs, Netflix. Wednesday, we had Verizon, NASDAQ, Chipotle. Thursday, we had good old, as the old-timers called it, telephone when I walked on the floor, a.k.a. AT&T. Southwest Airlines, Snap, Intel, Mattel, Barbie, killing it. Who knew? American Airlines, and WWE yesterday as well. You got quite the smattering of the economy that's this week, and that's not enough for you. Today, we had Honeywell, Kimberly-Clark, and American Express. I could go on, but Matt, this is your data, sir. Let us begin. Let us embark upon our earnings volatility journey. What is catching your eye out there from an earnings vol perspective these days? And how is the season shaping up, sir? You're so stunned by the season, you've been stunned into silence, sir.
Oh, God, Andrew.
Andrew has inspired you.
I know. I always like to start by looking at the season, getting my arms around it. And what we're seeing, Mark, for the good news is that the implied earnings move has come way down. So we've been seeing that option holders have been losing badly this last year, but I think this could be a turning point. I'm just saying that. Don't
say it. I've said that like two times now. It has not come to pass.
I'm going to say it because we're coming into week 3 and week 4, which are the strong ones. So the first 2 have not been good, with actual earnings moves way down about 4%. Usually it's about 5.5%, and they've been implied at 5.86. So I'm hopeful, Mark. I haven't been hopeful for a whole year, but there is a paradigm shift. I think it has to do with the Robinhood effect, that people just aren't looking at the fundamentals as closely and aren't rocking stocks that are moving on earnings. There's just so much money sloshing around our economy and our financial markets that it's really dulling the moves of the earnings in my estimation. But at least we've got these implied earnings percentages down. So that's I think that might speak well. For example, I just went and pulled up last season's earnings, and they were up at around 6, where it's about implied at 5 right now. So I think we got a chance this year, or this season, I should say. And yeah, like you said, just looking at some of the individual earnings that have come out, like you said, Kimberly-Clark was the biggest mover. They were only expecting 2.4% move. They got about a 5.5% move. Skechers, I should say. They're from California. I can't believe I brutalized their name so bad. With a big move today, 16.5%, but they were expecting 8.5%. But then there's some of the ones that were expecting a lot, like you mentioned, Barbie and Mattel. They're only moving 2% today. So we see we put out these reports, these result reports, and sort them. Green, meaning they move more than the expectation, and red, meaning they move less. There's, been a lot more red, but like I said, Mark, let's see if we could turn this around. Let's see. We got next week. we have some good names coming out. So let's hope that we could turn this around, Mark.
Well, you touched on it here. We had a question from one of our listeners yesterday, and I wanted to kind of save it for you. I addressed it a bit. I've kind of mentioned, like I joked earlier, I've been burned by this many times where I thought maybe we had squeezed the vol enough where this was going to be the cycle. This was going to be the moment where we have outperformance. And so far, I've been disappointed time and again. So I'm not ready to go out on that ledge yet again, Matt. I'm glad that you are. I'm glad that one of us is. I've been burned too many times. But we had Tony Weber ask us yesterday in our live chat. He said, looking at your ORAT's earnings data, he wanted to know any thoughts on why buying premium still is not working. Is it due to the drop in overall VIX? Or as you mentioned, Matt, is it the Robinhood crew? Everyone's pointing the fingers at Robinhood. Is it the Robinhood crew inflating the price, trying to hit homers? Which is it, Mr. Matt?
Well, I think it's, I mentioned the Robinhood crew just in the sense that they aren't looking as closely at earnings as people had in the past. I mean, they would break down every single thing around earnings, including now they have AIs that will measure the worry in a conference call. It's just some insane things that are going on right now. So I think it's just a overall expansion of the money supply, and people are just shooting for things. Dogecoin economy is not going to be kind to the earnings premiums, but I do think we're finally people are starting to finally realize this and bring down the implied earnings moves to something where I think we might be able to beat it this season. Mark, you could bring me on at the end and I'll reflect on that call.
We shall see if you were prescient or if you have been hoisted on your own petard. I like that. The Dogecoin economy. We're all kind of living in that Dogecoin economy. Since I brought on Tony, let's get on some more of our listeners. We got a bunch of them here as we get on into your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, buddy. Welcome to the Vol voicemail. Before I go on with some of the other questions, John Smolin from MIAX was on the show with us last week. He also heard Tony's question. He had some thoughts. Couldn't be on the show today, but he wanted to share them with us. He says he had a bunch of thoughts on this, actually. This question seems to really reverberate with people these days. He had a number of thoughts. He said, as more companies report earnings, I always thought overall vol went down. That tends to be the case. Again, over the course of the past year, we've seen a lot of unprecedented things happening. He also says it's not that buying isn't working, it's the value that you're buying at. And he also says buyers and sellers meeting in the market is essentially two people disagreeing on value. Inevitably, someone is right. Sellers seem to be winning. It happens. We've been in one of the great buy and hold markets from an options perspective ever. But it always ends. The trick is to change the strategy when it stops working. He also adds, go and choose more volatile stocks. So John Smolin, you heard it from him. Go buy GameStop. I'm just kidding. I don't have words in his mouth. The lower the vol, the more it favors the seller. And at some point, the market, aka vol traders, will require a rest period. If there's numbers never lie, he says. So there you go. A little bit of everyone chiming in on this. This earnings vol implosion has kind of been fascinating for a lot of people. We'll see. We'll see if Matt is correct. We don't call him the Oracle of New Hampshire for nothing. He was one of the first early last year to say, I think this vol regime has some legs pre-pandemic. So we'll see if this is finally the moment where we shall outperform from an earnings vol perspective. Again, I've been burned too many times to go back out onto that limb. We got a fun one for you out there right now. If you're listening live, if you're listening after the fact, it should still be live for you. Go over there at options. A fun little end of week poll for you, for the audience. Easy one, fun one. Just said quite simply, which of these levels will we hit first? Gave you 4 choices. A VIX of a 14 handle. Didn't seem that far away last week. This week, a little bit farther. The S at 4,300. so a wee bit north of where we are right now. Bitcoin at 70,000, so a wee bit north of where that one is. Or good old WTI, aka crude oil, hitting the 70 handle. So pretty much all upside. I wish if we could have had a fifth, maybe we could have squeezed in a none of the above or have a massive sell-off, and none of this is going to come to pass. But we don't have that option, so we got to go with these. Mr. Rock Lobster, we'll start with you. Now that you've slept it off a little bit, maybe you can think about this question a little bit more today. Which of these levels, I think yesterday, if I could discern what you were saying yesterday, it was very hard. I think you went with VIX of 14. Is that still your call, sir?
I did, but I have to say, I think that's going to be tough. It just, I think it feels like a lot easier for us to launch to go to 4,300 than it does to go to 14. I think the Bitcoin 70,000 is starting to become a bridge too far. Not that it probably won't, but I think not before 4,300. So I think I'm gonna go like crude at 70. Can't. It's like I don't know. I don't see a lot of people driving. I don't know. So anyway, I'm gonna switch, which is hard for me. If you would have said VIX 15, I would have given that a shot. But I think 14 is a bridge too far.
That's why we didn't go VIX. We had a 15 handle last week, so we couldn't go there.
So I'm going to go 3,400. 3,400. I think the folks are going to say 3,400.
See, we know your limits, Mr. Rock Lobster, and we always like to go one beyond them. And
sorry,
then,
4,300. I'm still suffering.
You're still a little hungover over there. Mr. Matt, same question for you. Which of these levels do you think we will hit first, or are you like Mr. Rock Lobster? You're kind of vacillating all over the place.
I think you got to go with the 4,300 for a lot of the same reasons that Andrew's talking about. I was thinking about crude, but this market's so strong, I'm going to go with the 4,300 mark.
It seems like our audience is getting some Rock Lobster disease because they're kind of all over the place now. When it started, it was kind of pretty even across the board. Then they really went hard for Bitcoin, and Bitcoin was almost half of the voting. And then it seems like today it's gone back the Rock Lobster way where everyone's kind of all over the place because now all of a sudden VIX at 14 has jumped to the lead with 26.9%, followed by an actual tie for number 2 at Bitcoin 70,000, and WTI somehow swung up there. It was way in the rear view mirror yesterday, both with 25.6% of the vote. And bringing up the rear actually right now with 21.8% is the S at 4,300. So, wow, that's not what I thought WTI would be bringing up the rear yet again. But no, our audience says it's a tight race, and that's a close number 2. Do you agree? I got a feeling you might have thoughts on this, listeners. Get on over there, add options. We'll pin it to our profile, so that way you can't miss it out there, listeners. And that way you too can vote. It'll still be live when the podcast goes out, so you folks will have a chance to weigh in. Are you as surprised as I am? Looked like Bitcoin was going to run away with it. All of a sudden now everyone's got Rock Lobster fever starting to vacillate all over the place. All right, next up we've got just a little bit of love. This comes in from Aston Crouch. He says, "Thanks for the shows!" ! Awesome. Well, thank you, Aston, and everyone else who takes the time to rate and review and listen out there. You folks are the best. You folks are the reason that we do this week in, week out. We dive into the fray. We embarrass ourselves on the crystal ball week after week. Well, some like the Rock Lobster, maybe a little bit more embarrassing than others. I've actually done pretty well so far this year, but that's neither here nor there. But thank you for that love there, Mr. Aston Crouch, as I throw some umbrage the way of the Rock Lobster. Speaking of love, more love. This one coming from Revon Gorges. He's a regular listener out there. He was listening to the show last week. He was loving that MIAX shift tool. He says that shift tool is pretty sweet. I've been using it for a few days now, and it's so easy to find high option volume by the hour. And he also put skills in there because he was looking at skills because we were talking about it on the show yesterday. Skills broke into our top 10, ticker symbol SKLZ, for the first time ever. So yeah, if you haven't checked it out yet, listeners, it's easy to find. Just go to MIAX, MIAX.shiftsearch.com. Maybe it isn't that easy to find, but you can find it if you go to that URL. It's a cool thing. MIAX folks are partnering with the folks over there at Vesica to put out some cool free tools. They want to make options analytics a little bit easier to access for everyone out there. Matt was just talking about people kind of just not looking at earnings analytics anymore, not looking at this bidding up the skew. We've seen this many times. A lot of the listener questions we're getting now from some of the newer entrants to the options market, it's pretty clear they don't really have a strong handle on really what options are or what's going on out there. And this platform could help deal and fix the latter of that by providing you with a little bit more information in your trading. They call it a revolutionary trading data research tool. And it's a great goal. They want to just help give more information out. I mean, exchanges giving away data, listeners. I'm not sure if you realize how rare that is. It's a very rare thing. Market data is kind of one of the last profit centers of all these various ventures. So the fact that they're partnering with the firm to try to give you some access to some more data, I think is pretty cool. It sounds like Revon's liking it. If you're liking it, let us know. Hit us up. And they're going to keep updating it. It's just they admit it's on 1.0 right now. So if you have something you like, maybe something you'd like to see changed or updated or a feature you want to add, hit us up. We'll pass it along to them. But it's a great tool and it's completely free. MIAXShiftSearch.com is the place to go. Kick the tires and light the fires. All right. Got a couple for you, Mr. Matt, actually. Well, first, we have regular listener here, J3 Dingle. Matt, you're really resonating with our audience these days for the questions. I'm not sure what it is about the Oracle of Omaha that has captured the Oracle of New Hampshire that has captured their interest. But first, he was chiming in about we were joking on the show last week about how when Trump came into office, of course, everyone said Trump is not a single-digit VIX president. Then, of course, we got that weirdly low Trump single-digit VIX year there of 2017. So J3 Dingle wanted to know, with vol coming in, should we call this the sleepy Joe Biden market? It's got a ring to it. We could maybe workshop it a little bit, but I kind of see where you're going with it. Certainly, if we hit what we have in our poll, the 14 handle, you can start making an argument for not quite sleepy, but sleepier. When we get into single digits, then we're talking seriously sleepy. But I'm okay with that. And then he had sent a question in a while ago, back in there during the GameStop debacle really taken off. He said, isn't there a saying that 1987 wiped the smile off of the options curve? Did Game put the smile back on, a.k.a. did it cause a massive bid to the call wing? And he heard your appearance recently, I think it was on Twifo, Matt. He wrote in to say, it sounds like Matt Amberson thinks the answer is yes. So, Mr. Matt, what do you have to say to that? First off, are you down with calling this the sleepy Joe Biden market for volatility? And then B, what do you think about, did GameStop, or as you put it earlier in the show, the Robinhood folks, have they put the smile back on the curve, sir?
Well, without getting too political, I think it's more of the weekend at Joe's. Biden's, there are other people controlling a lot of the things.
They're just dragging his corpse around from place to place.
Yeah. And, I think he's not really in charge, and there's just so much other stuff going on. Whereas at least with Trump, you knew someone was there. Here, you don't know what's going on. All of a sudden there's an announcement that there's a big tax, or there's they're bombing someone else, or, I could see why balls a little higher than definitely than the single digit president. But it's from J3 Dingle, great comment about 1987, and I talked about it earlier in the show that when he's saying wipe the smiles off the option curve, he's talking, I think, more of the right side, the out of the money calls, and he's saying, did GME put the smile back on? And I would say, yeah, Robinhood and everyone and all the printing of the money has put that right side smile on. But like Andrew was saying a little bit earlier, there's still some slope there, meaning there's still some bids right in the middle is where I see it right now. The put call slope to the downside for the SPY at least is kind of right in the middle. So it's not really given up and not really one way or the other, but definitely we're seeing some more smile. So again, an astute question, and I think that at least GameStop and the Biden market has put a smile at least on the right side of the skew, Mark.
Yeah, we have an astute audience out there. Oh, right. You can't leave the Fed off of that equation as well for putting a little bit of juice back in that call wing out there. Mr. Andrew, are you down with calling this the sleepy Joe Biden market, or do you prefer Matt's flavor of Weekend at Joe's? I find that hilarious. Just the image of him with the sunglasses on, like the Bernie's guy getting dragged around. Anyway, I digress. And of course, what are your thoughts here on, did GameStop and all these other factors put the smile back on the curve that 87 wiped off, sir?
As I recall, I remember Matt on the election eve show, and kind of agreeing with his prognostication on, and I'm still kind of shaking my head over that one, but that's another subject totally. Yes, the Weekend in Birdies. I have to admit, that is a solid picture in my mind right now. The Weekend at Birdies market. I think upside. I think at least temporarily that SKEW is in the market. I also think at just looking from a like realized vol point of view is come down huge. So I think the liquidity providers are not stupid. They're going to leave stuff expensive, as Matt and you well know. Why should they take the curve down if there's still a bid for those options? So until people stop buying them, it's going to stay. And I don't know when it goes away. I do think there's been a pretty big drop off in the ranges of a lot of these names, and they haven't really started doing anything super fantastic lately. As some reality sets in. So I think it will stay here until folks come in and sell it, and we haven't really seen that yet. We haven't. You haven't started seeing people like, heck, I'm making money doing buy rights. That has not been materializing. Everybody's like, man, I'm buying these calls for 20 cents. And as Matt said, the Dogecoin economy, I buy a call for 20 cents, they go to $50. That happens all the time trading options. As Matt knows, he's been doing this for 30 years too. Actually, that doesn't happen very often. Although sometimes I felt like the only times it happened was me when I sold them. But anyway, I digress. But I do agree with him on his take on this weekend at Bernie's market. We'll just call it that. Let's just go for it.
Weekend at Bernie's market. Weekend at Joe's. A lot of ways we can go all conjuring up the same silly image. Here's our dose of this question for this week. LDLT says, hey back at you, LDLT. What's the status of the UVXY split? Like we said earlier, I have not heard it. Maybe Rock Lobster's heard a rumor that I have not, but as of right now, I have not heard anything. Well, also, we'll wrap it up with these two. Also from Mjolnir, obviously, maybe a fan of the Marvel movies. He likes himself a little bit of Thor's hammer. He says, do you think we're headed back to the old days where people just load up on VIX and Spike's calls? Well, we're not quite there yet, as evidenced by the top 10 and all the OI out there. Still pretty put heavy in VIX and the other related products. But, if we trend the way we're looking, and if our poll, which currently has VIX at 14 leading, if we get back down to, let's say, a 14 handle or a little bit below in VIX, yeah, we could easily be back to those days where all of a sudden 50 Cent is back in action and upside is a thing again in VIX. And dogs and cats are living together for mass hysteria. Here, a bit of a twofer here, Mr. Rock Lobster. First off, have you heard any secret rumors I have not about the UVXY split? If so, enlighten us. And then do you think we're headed back to the old days of everyone just buys VIX calls again, sir?
I have. I was seeing something. You could go to ProShares, New Center Analysis. Yes, I think they're doing a 10 for 1. And they're saying May 6th.
Oh, so you have a date now. All right, cool.
I just think I want to see it confirmed. Here's you know what? This guy's usually reliable, Vince. Six-figure investing. He's pretty good at doing all this stuff. So, but yeah, it does look like they are going to do a 10 for 1. So anyway, coming May 6th. So we'll see. If they can get it done correctly here. So it's funny, all these goofy products, they have these crazy splits. And also, are we going to see VIX coming back? Well, I mean, as of today, I think that all that upside is shrinking a little bit in VIX. So I'm going to say that one day is not a trend, but it's definitely some of the air is out of the balloon on the upside in VIX. So, and I think a lot of listeners, especially if they're relatively new to trading options, what you've seen in 2020 and the beginning of 2021 is, I'm going to say, and Matt's a much better statistician on this one, but that is an anomaly for option vol and option movement. And although I do believe that since the Fed has gotten so heavy-handed in financial markets, that we're going to see a lot more volatility swings, which is good for our business because it teaches people how to trade the vol. But I think you're going to see more of it. But I think it's abnormally high vol right now still. So 17, a little getting back to more normal, but when you have all-time highs in stocks, this is definitely a very high vol. So it's still a little bit bizarre world in that way.
Yeah, I can't imagine. I know we have a lot of them. They've written to us. I can't imagine being one of those people who your first exposure to options came in 2020 or early 2021. This is so aberrant by just about every stretch of the imagination that it's going to be hard for you to have a realistic handle on how options work. But that's why we're here. We'll try to expose you to a little bit of normalcy, bring you back down to earth. It's time for us to come back down to earth as well with our predictions. It's that time, listeners. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt to wrestle with the slippery pig that is volatility for the coming week. And both the Rock Lobster and I got kind of lulled. I think that 15 handle in spikes kind of lulled us last week because we were both feeling a 15 handle this week. And, spoiler alert, there's no 15 handle. That's obvious. Spikes at least broke briefly into a 16 handle, 1697 to end the show, but it's pretty much right at about a 17. Fixed cash also at about a similar level, right around 17. So both of us are beyond a point away, which is outside our margin of victory. I was closer. I was at 1589. So if you factor in spikes there, I'm actually about 1.1, not even 1.08 away. So that actually isn't terrible, but it's not enough to claim victory. Mr. Rock Lobster was at a 1569. So he was much farther away, just beyond any sort of hope of victory out there. So, but spoiler alert, none of us win for this week. So you know what that means? Our guest, the Oracle of New Hampshire, gets to go first. Mr. Matt, sir, what are you feeling for volatility this time next week? I
am feeling vol. I'm feeling it's coming back. I'm going 19.99.
Ooh. Just give us a little insight into the Oracle. Why are you feeling so much juice, sir?
I've been just in my personal account, when it gets to around 17, just buying a little bit. It spikes up, gets to, and I think we're going to get a little bit next. There's a lot going on in the weekend at Biden's economy, so I think it could be there.
How many times different ways have we said that now here on the show? But yeah, you're right. It has had those bounces, and that's what I've been saying on the show many times. Whenever we flirt with these low levels, something always conspires to rocket us back up, just like it did this week as well. And we have seen, as you mentioned, the spikes, pun intended there. It does seem like it likes to have a little bit of aggressive upside coming to it. So we almost hit that level earlier this week again. So 1999, the Oracle coming up a little bit higher vol. All right, I was next closest, I guess closer than the Rock Lobster. So I shall go next. And I like what Matt's saying. It's interesting. I'm not quite feeling that, but I like that someone's coming in with a little bit of a different bent here on the show, bucking the sleepy weekend that shows kind of market here. So yeah, about a 17 on both of these products. I kind of feel this time next week, I'm going to say a little bit less, not a ton. I'm going to say 16, about a point north of where I was last week. I'm going to say 1685. So sell off a bit, get into that 16 handle, maybe spikes even gets into a 15 handle. Then as Matt alluded, something's going to conspire to get us back up a bit, and then we'll kind of settle out back at this level again. All right, Mr. Rock Lobster, you got a chasm. You could drive several semis through this 3-point and change market here. 1685 on the dark side. Matt playing the Russell Rhodes role, going upside here. What are you feeling this time next week, sir? Oh, he wanted to make you feel better by muting himself.
I thought I was going to get away for the whole show. You know what I should have done? I should have written my number down. I should have written my number down in Skype first. I think I'm going to start doing that now. But I'm seeing. I thought we would see something like, I'm saying like 1650. So I'm going to go lower than you, but by a good amount. So you were like 1680ish. I'm going to say 1650. I'm going just lower.
Okay, so there's your market, listeners. Kind of all over the place. 1999, me at a arguably very level-headed 1685, and the Rock Lobster at a completely outlandish 16 and a half. All right, everybody. That's going to do it for this episode of Volatility Views. But before we go, let's go back around the horn. Let's start with Mr. Matt. Did an able job in the MIAX hot seat today. You touched on some cool tools. You guys always have cool new tools up your... It's a great time to be an options trader. You got tools coming at you fast and furious out there. So, Mr. Matt, if folks want to check out the earnings data or your back tester or some of these cool new tools you just mentioned on the show, where should they go? What should they do?
Yeah, it was great being here representing MIAX. I did check out their shift. So go on the show notes and check out it's a neat little product. We could see it in our tools as well. This ITBs trade pretty big today. This the builders index. But go to orats.com. We have we just released a major release. Did a blast email out. We have some really neat volatility tools I alluded to earlier. We have introduced paper trading. And we're coming out with auto paper trading. So you can put in a strategy and it'll auto trade and paper trade for you, so you can see how it's doing before you actually put money to work out there, Mark. So a lot going on at ORATS.
Yeah, I'm looking at your site right now. All this stuff's there. The back tester, the products, a lot of cool stuff, listeners. Check it out for yourselves. ORATS, ORATS.com is the place to go for all those cool tools and a whole bunch more. Speaking of cool tools, check it out again. It's a fun one. MIAX, MIAX .shift search, SHIFT search.com is the place to go. We'll put it in the chat. We'll put it out in the show notes there as well, so you folks can kick the tire. They want your feedback. They're trying to develop this. This is very much not quite a beta, but a 1.0 version of this tool. So if you have something you like, something you don't like, give them your feedback. They want to hear from you, and that'll help evolve the tool going forward. And of course, you know where to go for all the great spikes data. MIAXoptions.com/spikes. Got the back data. It's got the press release. It's even got a cool link to a show you might like called Volatility Views. What more, I ask you, can you demand from a volatility-oriented destination? And Mr. Rock Lobster did an able and nicely non-drunken way edition of a job of holding down the Matrix hot seat today. If folks want to check out what you have cooking, where should they go? What should they do?
You can go to optionpit.com. You go to Vol Edge, and our Vol Trade Club are offering as a package. Amazing string of trades for people. I don't know, like 9 in a row or something like that, or 9 out of 10. But pretty starting this year off in a pretty disciplined fashion. So if you want to learn how to trade vol, trade these futures, and try to get the best edge in your favor, check out Option Pit. And you can learn this stuff. You just don't have to pay up for those big out of money calls all the time. There are learn how to trade vol when it's a 12 vol market. That's all I'm going to say. It could happen. I don't think it's going to happen next week. But it's good to put that lower vol type of trading into your back pocket to learn how to
12 vol, sir. There's a lot of people out there who have never seen a VIX of 12. That just seems like that's a white whale to them. That's a unicorn to them. They can't even process that. So, Yeah, a lot of people need that help. OptionPit.com, the place to go to begin your journey. And you know where to go to learn more about execution services and trading technology. There is only one place. It's Matrix. You can find it more for yourselves. Matrix, MATRIX, executions.com. Give them a follow on the old Twitters. While you're at it, they're just at Matrix, MATRIX Tech. Matrix EX, I should say, Tech. Matrix EX Tech. Give them a follow for all the info they put out in between episodes. On behalf of everybody over there at Matrix and everybody over there at MIAX and Matt and the Rock Lobster and indeed myself, thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions, for voting in our polls, all the fun stuff that you do. Keep it coming. That does conclude our live broadcast week here for the network, but don't worry, we'll probably put some fun extra credit streams on here later today or throughout the weekend. We'll be back again live on Monday with the option block all the way through to Friday and another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution in trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.